Welcome to a bonus edition of the Mistake-Free Real Estate Podcast. Most of the time, I am the interviewer, but today I am the interviewee. Bryan Driscoll is going to interview me and talk to me a little bit about the state of the market and where I see it heading. I hope you enjoy this episode.
Hey, welcome back, everyone, to another episode of Eat, Sleep, and Invest. I'm your host, Bryan Driscoll, and I'm here with Marck de Lautour. What's going on, Mark?
I'm good, mate. Good. Happy to be here. Thanks for having me.
Yeah, same. I'm glad to have you on here, too, because, a lot of people, actually, I'll let you tell everybody what you do, but you're doing some awesome stuff, and I think a lot of people can learn for you. So first, how did you get into real estate? How did you get into this space?
I'm a grizzly old vet. I've never had a job. I came over to America on the back of an athletics scholarship. I was a fairly decent tennis player and played Division I at University of Missouri here in Kansas City. And so while I was getting my MBA, I flipped a house and made some money. And I thought, why should I go work for Sprint or T-Mobile or Ford or Hallmark Cards, some of the big employers here in Kansas City? So just kind of got started in real estate, and it was kind of love at first flip, and figured out a way to buy houses. I was kind of a niche courthouse steps auction guy. Was kind of my first foray into real estate, and so we bought a lot of property on the courthouse steps. And I think we're working on our 2000th flip now in Kansas City. So we've done some volume over the last 20 years.
Yeah, that's some decent volume there. And yeah, tennis. I mean, we played pickleball before. Man, you're wicked.
Yeah, that's the new cool club thing, right? To do the pickleball. But yeah, the hand-eye coordination translates pretty nicely.
Yeah, it does. So flip 200. That's a lot of flips.
Yeah, we've done consistently over 100 to 150 a year for the last 10 years. So that racks up pretty quickly. The first 7-8 years, I think we did somewhere around 300 homes, and then obviously cut our teeth. You'll see behind me this Mistake-Free Real Estate logo. It's very much tongue-in-cheek. I like to joke that, hey, I've made all the mistakes in real estate over the last 20 years so that others don't have to. And so now we've really changed into a turnkey provider, Bryan. And so for those that don't understand turnkey, essentially we wanted to create a space where you could invest in real estate with the same ease that you invest in the stock market. I believe that the stock market is gambling, right? You have no control. You pick a few stocks here and there. Maybe you do a mutual fund, but at the end of the day, you're on the outside looking in. And so I've never understood it. Never understood how things can go up and down so quickly. And at the end of the day, you're investing in paper, not in a hard asset. And so I enjoy real estate. I enjoy the strength of the asset and the utility of the asset that you can use in so many different ways. You can live in it. You can rent it. You can Airbnb it. You can wholesale it. You monetize real estate in so many different ways that it's been a great run for us. But we also know that being an active investor is not for everybody. And so we provide people a passive way to invest in real estate where we do all of the work, including the property management on the back end, and others can just, put their money down and buy real estate, knowing that they've got a partner who's flipped 2,000 homes and manages 700 doors that kind of knows what they're doing.
Yeah, and that's huge too, because I remember when I first got into real estate, I was doing my own property management, and that sucked. And you lose so much money. So working with, you're managing a lot of doors, you know how to do turnovers, you know how to save people from all the cash killers. Cash killers? What are the main things you see?
Oh, dude. So you're speaking my love language. There are two big killers of cash flow, and they will come down to two things, and that is maintenance and vacancy, right? So with maintenance and vacancy, if you had no maintenance and no vacancy, everyone would buy real estate because it would work out the whole time. The whole key with dialed-in property management is reducing those two things. It's rare to get them to zero, but having metrics and understanding that you have to, knowing that vacancy is important. As soon as someone gives you notice, you're looking at the property, you're planning your scope of work ahead of time, you're getting the guys in there to do a quick turn on it, freshening it up, you're pre-leasing it to get someone to move in quickly. So all of these things that we do that are kind of next level property management is why we're really good at the property management game.
Now you're in Kansas City, right?
Yeah, we have operations in Kansas City, and so Missouri, Kansas, and Alabama are kind of the three states that we focus on. Kansas City's a good appreciation play. We're down in Montgomery, Alabama, where we feel there's a strong cash flow and kind of a lesser appreciation, but a really strong cash flow play. So we like to give our investors, the benefit of diversification across multiple markets. And so we are in those three markets right now, always looking for more.
Yeah. So if anyone's listening too, because you do JVs and you're looking for deals also, right?
Yeah, for sure. I mean, that would be one of our biggest asks, I guess, in this market is everyone's struggling for inventory, and it's challenging. We're spending a lot of money on advertising every month to try and get sellers to call us direct, but we also work with relationships with realtors and wholesalers and investors and bird dogs of any kind that are just saying, "Hey, I know someone that wants to get a quick, fair offer on their house," and that's where we'd love to work with people in the Kansas City marketplace for sure.
Awesome. So different question. So I had a chance we went to Guatemala and you weren't able to make it, but your kids came. What are your tips? Your kids were awesome. Like, what are you doing over there raising these guys?
Oh, wow. I will go back to saying I had a pretty good blueprint for success. I was recently on Trang's podcast and he said, "What's your superpower?" And I think my superpower, Bryan, was that I was born and raised in a loving home with two parents that are now 50 years married, that had a really good blueprint for what a quality household should look like. Loving parents and really good support system. They encouraged us to grow wings and then go do our own thing. I chose to fly pretty far away with my wings. All my family lives back home in New Zealand, but no, I just hold them accountable, right? It's like you lovingly discipline, but hold them accountable, hold them to a high standard. You point out things they're doing wrong in a loving way, and there's a lot of things in this society right now to point out that things are doing wrong. We certainly don't have it all figured out, but they are self-motivated individuals, and we're very proud of them.
Yeah, tell me self-motivated. Your son Jackson was telling me he wakes up because he's in high school still, right?
He is, yep.
And he's waking up at like 5 a.m. to go to the gym before school?
Yeah, he found that, with baseball practice after school and then, his responsibilities with homework and everything in the afternoon, the only time he was, getting up. But, I mean, he has dual screens. We set him up with dual screens, in his bedroom, and he'll be doing his homework on one and listening to either, Joe Rogan or a podcast from, Ben Shapiro or, one of these other influences in this space. And just so he's consuming all the time. And I'm sure with Rogan, he gets a lot of, he loves David Goggins and, suffering, he's not afraid to suffer. So he would always get up. He's recently, the last 12 months, been getting up at 4:30, and he's at the gym by 5, works out for an hour and a half before he gets to school at 7 o'clock in the morning. So once he could drive, he found the freedom to be able to go do that. He didn't have parents that loved him enough to wake up at 4:30 and drive him to the gym. Especially when we have, a workout facility, at our house, but he just loves going to the gym and getting motivated by his personal trainer. And it's a good thing. He's very motivated in that way, but he's driving towards his goals. He sees the insight of his a baseball scholarship in college, and that's what he's passionate about. So he's giving it his all.
Yeah, that's good. And that says a lot about you. Like how I was just impressed there. So, okay. So on that, so how you're raising your kids, how are you scaling? Because I'm sure a lot of how you're leading your kids translates to what you're doing in your business too.
Yeah, accountability is a critical factor. By the way, I'm not scaling my family anymore. I went boy, girl, stop. But yeah, scaling the business, was a challenge. I hit a bit of a wall. I mean, no path is roses the whole way, and I certainly have got punched in the face many, many times. With a business divorce back in 2008, had to reinvent myself. But then in 2017, I was just burned out, Bryan. I was trying to scale on my own. And what I realized that my weaknesses are, through some introspection and through talking with other people that I respect and we're getting mentored through, I realized that one of my biggest weaknesses is accountability. I tell people to do things and then assume that they get done. And the follow-up, the detailed follow-up that you need to hold people accountable, to lead, manage, and hold accountable, the LMA that they talk about in most of the books like Traction and EOS structures, was not my strong suit. I'm a visionary to the nth degree, and so I needed a COO or someone that would be able to come in and really hold people accountable for us to scale and not scale out of control. And so Chris Johns, who actually was, I think, joined you on that trip to Guatemala, is my, second in command here and does an amazing job of, we work really well together. There's a book called Rocket Fuel. I see Traction behind you, but one of the books off that series was Rocket Fuel, which talks about that CEO-COO relationship and how when you have two guys that come together or two people that come together, it kind of generates like rocket fuel coming together, and we certainly felt that. He has unique traits and character traits that help in our business, and I'm over pushing new boundaries.
Yeah, that's huge. That's a huge point too, because like understanding your weaknesses. Everyone's good at something and everyone sucks at something else, but I noticed like the things that I don't like doing, they actually take energy from me, but other people love doing them. So like you and Chris, it's probably the same thing, because he likes doing this stuff that you don't, and vice versa.
Yeah, look, I don't mow my own lawn because I don't want to rob my lawn guy the pleasure of mowing it, right? It's like there are things that you choose to do and things that you don't. And so in each capacity, whether it be, in social media, clearly we're trying to push ourselves out there right now. That's not through my efforts, but through one of our employees, Pete, who's here in the office, and marketing and sales and acquisitions. I mean, there are things that you can do. Just because you can do them doesn't mean you should be. To your point, there are things that people love to do, and they sap energy out of us. And so focusing only on the things that you're good at is one of the ways that you can scale without scaling out of control.
Yeah, and it's so important. I struggle with that too, because we're growing quickly. It's like you want it, like especially when you start the business yourself, you want to control everything. It's like no one else can do that. No one else can do that. Well,
yeah, what I've found is that it's a lot of it is to do with the pay structure, and either incentivizing through incentivizing high level executives to be tied to the bottom line is one way, but then just with regular all our other team members, I think that I got away from thinking, okay, here's my budget, and now I need to go find someone that can fit that budget. I said, here's a job that I want done. Let me go hire the best person for that role, and whatever it costs. Because the extra $10,000 you might pay to get the right person, you will get back infinitely more, because you can now give them a role, give them a scoreboard. So in the 4 disciplines of execution, Chris McChesney says, give your employees a winnable game, then keep score, and you'll win. And I think that's the key is you set them up. You obviously have a way to track metrics and give them reportables. But from there, I really think that the next step is getting out of the way, and that's half the battle.
Yeah, how are you able to tell? So say you got that role, you have that role out there. Like I always had a problem, which we're dealing with, is going through EOS and PI and all that kind of stuff. How are you finding the right people for that seat versus just hiring from your gut?
Yeah, so we went away from gut and we actually hired someone to come in and hire people, right? So we actually found someone who was really, really good at PI, like nerds out on PI, like talks it at a level that I can't even. So Predictive Index, for those that don't know. So whether it's Culture Index or Predictive Index, if you really get in tune with the role that you're hiring for and the perfect personality type for that role, then when you put a really so job descriptions matter. So telling them about who we are and what we do. So a really good job description, a really good intro on who we are as a company, and then that flowing through to a predictive index. And they have to take the predictive index test before they even get all the paperwork presented to the person that's looking at it. So once they come through, they have to match to like either a 9 or a 10 out of 10 to even be interviewed. And then we go through a really strong interviewing process where the first one is our HR team. They do a quick intro. Oh yeah, a little bit of this and that. Does they have good energy? Do they feel like the right person? Okay, then they would talk with their direct manager. Then they'll talk with Chris, and then they talk with me. So it's kind of a 4-step process along the way. So very structured on how they are hired and then screened. And then when they onboard, equally important is the onboarding. I think Ren Bartley did a really good presentation on it, and we had kind of done a lot of that up front, but we obviously tweaked it when we heard his. But just giving a really strong onboarding for your team members, so that when they come on board, they are thrilled, they're excited, they have their laptop all done, their names there, they have all their login and passwords. They can kind of hit the ground running on day one. They're not like trying to figure out their email on day one.
Yeah, that makes sense. What's your predictive index? What are you classed as?
I am a captain.
Okay, I'm a captain too.
Yeah, shocking, right? I mean, okay, so pretty much everyone that's a visionary leader is either going to be a captain or maverick, hopefully captain. But yeah, so that's, I have maverick tendencies, but yeah, captain, it's kind of just go do my thing and then have someone else to come and implement these ideas.
Yeah, so that makes sense, because Chris John, I don't know what he is. He told me before that, but he's total opposite. And yeah, so anyone listening, captains like kind of like running business owners, things like that. And you need your counterpart that holds everyone accountable and keeps everything in order and is a structured person. So anyone
Yeah.
who doesn't know anything about Predictive Index, go Google it. There's 17 different classes. And I think you can take the test for free. Go see what you are, you know?
Yeah, it's interesting. So Chris is the exact opposite. Like, it's almost funny. Like, I am the first one to kind of stand up and leave the meeting, and he's like, "Okay, now that Mark's gone, like, now you've got that, you've got this. What are your takeaways?" But like, he literally goes around the room talking about all the different ways, and that's the first step of accountability, is just making sure that people know what they're meant to be doing and when they're meant to be reporting back. So yeah, I've learned a lot from him. It's been a good partnership.
Yeah, and that's so important, like building team. Like, I could see him. He's probably an analyst or something, I would guess.
He's an analyst. You got it.
Yeah, and you figure, like when you know, when you're hiring too, if you know someone's like that, don't stick them in a sales position.
No.
Like, that's a nice thing. You can see
Yeah.
ahead of time. Like, okay, he's an analyst. He's not gonna be good at sales, but let's see if we have a role for them, because they're gonna crush it over in this space. And
Yeah.
it's analytical, you know.
That's exactly that's the idea, is putting people not only what they want to do, but what they were born to do, kind of thing, or what they've been raised to do.
Yeah. So, what do you think's going on in this market? What kind of recommendations do you have for people?
Wow. Yeah. Challenging market. So first of all, I'll that's two-part question. I'd love to talk about what's going on in the market, and then I'll come back to what I think people should be doing. What we're seeing in the market right now, we are April of 2023, and it's been unique. There was a 6-month blip where it was very tough to both buy and sell. Because there was a massive disconnect between what a seller was expecting to get for their property and what a buyer was willing to pay. And, Jason Medley talks about the change in the market kind of being like the grinding of the gears, like that 10-speed bike where you kind of hear that, the grinding of the gears as a 10-speed bike changes. And that's what it felt like. It was just this weird time where nothing would sell. And all of a sudden, we patiently waited through till, well, we didn't really patiently wait. We're taking massive action. But when the market opened back up in about February, we started getting tons of activity, and we'd put properties on the market and we'd get multiple offers. And March was like a bonanza of sales. I think we sold 33 houses in March. It was insane. So yeah, we have been very, very busy. The market, I think, has adapted now to these new interest rate environment of where 6.5% to 7.5% interest rates are just fine. You can still get good cash flowing property. Homeowners can buy knowing that, hey, the difference between the next 3 years at 7.5% versus being able to refi and pull down to a 5% rate in 3 years' time, you're probably looking at a couple $1,000. It's not that big a deal. Let's just buy the house anyway. There's been some pivots and moves in the marketplace, as far as the acquisition side, for sure. It's been challenging to buy the amount of inventory that we are used to. We built a machine, Chris and I, to flip 150 homes. Now this year we might do 60 or 80. I mean, it's been a massive reduction. So, adapting to that and making sure that you can still, roll out a business model that is still income producing and revenue generating has been a challenge. It's a unique time, and I think in 2024, it's a political year. So anytime there's an election year, I think you dumb down your expectations. So I would expect some kind of correction, a major correction in 24. I think it'll probably get dumbed down and pushed to 25, just because with the election coming, people are going to want to try and all political decisions will have an air of how will that look in the public. And so with that perspective, I think you'll probably, some of the decisions will be dumbed down from what they should be. So you're probably looking at 2024 being a little bit shaky, but then in 25 it'll be rough.
Yeah, that's kind of what I think too. Like, something has to happen,
mate. How long are we in? I mean, can we really have this long bull run for 14 years? Something has to give. And you don't dump $3 trillion into the economy without having any kind of negative ramifications of that. It's the normal market economics have not been able to be there, and now that they used to only have one lever that they could pull with interest rates, and now with interest rate, the only way they could go was up. So they only had a brake. Now they kind of have an accelerator and a brake. They could either raise or lower interest rates, and I think they're in a much healthier space.
Yeah, I agree too. What are you doing in your business to pivot for what you think's coming? Like, how are you guys changing?
Yeah, so about 2 years ago, I mean, obviously knowing that we were this, that something could happen, and honestly, it should have been COVID, right? I mean, for the all intents and purposes, COVID should have decimated the economy and put people out of business, but it didn't because of the $3 trillion that the government, rightly or wrongly, threw into the marketplace. So. Propped up a lot of businesses, kept people afloat, and kept people alive. Really, I mean, it would have been a massive global recession if they just didn't do anything. So you can argue whether that was the right or the wrong thing, but regardless, the decision was made to pump a bunch of stimulus money in and help people get through that time. But now we're through that time. So what's next? We pivoted a couple of years ago to new construction. So we have been. The fix and flip model is very challenging. If you think that every house requires even just 50 decisions, right? And you're going to do 100 houses a year, that would be 5,000 decisions. 5,000 decisions over the course of a year and having all those managed and executed and held accountable is just a mammoth task. If you are building, you make 50 decisions up front and then just have it rinse, repeat all the way along the road. So we like the new construction model. Our investors like the new construction model. I've never been able to do new construction single family and see it pencil. It just you're getting so much for the value of the asset, Bryan, as an ARV, right? Like the owners, the owner occupants will come and pay way more than an investor will for the asset. So the smart decision for the new builder on single family homes is just sell the asset. They're not cheap enough. But once you get to duplexes and fourplexes, new construction pencils in a very meaningful way. Your economies of scale goes up. Your rents are high in our marketplace where we're choosing to build. And so we've been building fourplexes with $1,500 of monthly rent per door, which is $6,000 per building. So now you're selling those for, $750,000, and yet they cash flow. So the investors are deploying some meaningful capital, which is what they want, mistake-free real estate. They want to deploy capital and have it professionally managed. So we're getting these rented out. We're getting them leased up. We're holding the tenants accountable. We've heard that word a lot today, almost like it's one of our core values. And then we are allowing our investors to enjoy the benefits of passive real estate and long-term wealth accumulation.
That's interesting too, because like with I play in the rental space, and number one, decisions. What I always notice, and someone told me this a long time ago, they're like, when in business, you just have to make sure not to make the wrong decision, right? Which is easy and hard, but it's like one decision out of that flip, out of those 50, all you have to do is get one of those wrong, which could blow your whole deal.
Yeah, and it costs you a lot of money. Look, we flipped 150 houses last year. We did not make and I could brag. I used to brag a long time ago for like the first 15 years, I never lost money on a house, but it's largely because I was involved in every single decision along the way. The challenge for any young investor is to remove yourself from the decision-making process and still not lose money. The silly things, right? Like buying the wrong home, making a bad decision about tearing a wall down when it would have been fine without, putting tile in a bathroom where you should have just put, a tub surround, buying on a busy street, paying too much for an asset, getting talked into a buy or when you should have been, negotiating them down further, seeing a $60,000 wholesale rip on a house where, we end up losing money on. It's like, I think there was, I love wholesalers. I mean, bring us deals, but clearly that was out of balance there, right? I mean, there's so many ways to lose money and make mistakes in real estate. The challenge is to minimize those and try and get to where you're mistake-free.
Yeah, and I like that too, because especially in the turnkey space, if you're doing new construction, the properties are done. Like, you don't have to worry about getting nickeled and dimed. Needs a roof this year, needs a furnace. You're probably good for, 15, 20 years really before the major stuff would start getting affected. It's
a long time. So for our investors, we guarantee it for 12 months to have zero maintenance, right? Zero maintenance because everything's under warranty. And after that, still, they're not going to have any HVAC or roof, windows, siding, the big ticket items. So between plumbing and HVAC, those are your major items. And obviously, if the only thing I think that could go wrong on a new construction would be someone shoving something down a toilet that shouldn't be there, which as a landlord has happened before. So we'd hold the tenant accountable to that tenant charge and move on. But the owners on those assets are going to have some really good cash flowing assets for a long time.
Yeah, cool. So now what's it? I know you talk about good real estate. Don't sell it. Never sell good real estate. What do you mean good real estate?
I consider, good. Yeah, that's a terrible word, isn't it? Let's get more descriptive. So, I say that the best exit for real estate is to never sell. And the way you would exit is you exit the earth, right? So when you die, you leave your through inheritance, you leave all of your assets to your children, and they get the benefits of step-up basis, where they start to depreciate all those assets again. They get the instant cash flow that comes from those, and they get all the benefits that come from real estate as they are professionally managed. I think good. I've always been a guy that has shied away from buying in war zones. So whatever you want to call, I don't know if it's inner city in your market, but we just kind of have a area that we choose not to buy in. I don't want to go knock on a door and worried about a crime or a war zone or some guy having a gun on the other side of the door. That's not my kind of landlording. So we prefer A and B areas. So if you go A, B, C, D, A is where I want to live, aspire to live. B is where I'm comfortable living. C is where I could live and just, don't really want to be here, but that's where I can afford. And then D is I would never want to live there. So we're only in the A and B areas where people want to be living. And so in those A, B areas, we focus on good school districts. And then after that, it's a matter of just getting quality homes that people will rent out over time. Again, for rental, I don't mind a busy street. It's never an issue renting out a home on a busy street. Selling a home on a busy street is more challenging, but renting them is great. And so we're just looking for we take new used assets, we beautifully remodel them in A, B areas, and those are the assets that should stand the test of time.
Yeah, I'm with you there too. It's crazy because I do the rentals also in A, B neighborhoods, and it's like, even I bought a deal probably like 10 years ago. I'm like, this looks okay. The numbers made sense, but then you look back and you're a genius.
Yeah.
Because when you're in those good areas, the properties appreciate really well.
Yeah, look at that's the thing, mate. If every real estate in Kansas City doubles every 20 years. I mean, it's just been, we've proven that, over, our track record for sure, and going back even further when you can look on the MLS. I mean, we're buying stuff that was newly constructed in the 80s for $100,000 and now it's selling for $400,000. I mean, it's just crazy. So, if you buy in those areas, it's always easy to look back and say I made good decisions. The one thing that holds true, Bryan, is I've never met a 70-year-old gray-haired individual that says, I wish I didn't own all of that real estate that I currently own. It's just never happened. It probably never will. So, excuse me, how'd that happen? That's my takeaway, is that it's always easy to look back. It's more challenging to project, and it's scarier to project. And the one thing I try and educate all my investors on is, look, it's a buy and hold mentality. If you come in here with the idea of trying to time the market or speculate on investments going up or down in value, look, we're not the right provider for you. We just like investors that want to park their capital in investments that they can leverage up. So to buy $1 million worth of Google stock, you need $1 million. To buy $1 million worth of real estate, how much money do you need? If you're good, maybe a couple $100,000. Yeah, 100, 150, 100, yeah, whatever, right? I mean, some would argue you don't need any money to buy real estate. So, but yeah, passively you need maybe 20%. And so you can leverage up a massive portfolio that's going to double in value. But, oh, look, the tenant's been paying down your mortgage for you. And you've had a property management team that you've paid to manage that asset for you the whole time to make sure that it's positively cash flowing. So, if you surround yourself with positive individuals, that's one of the greatest benefits that I've had, is just surrounding myself with great individuals that love what they do. And the property management team is of that ilk, right? Where they love what they do. They love the systematic and automated approach to continually just getting these properties rented out, doing the turns, holding tenants accountable, giving them a great place to live, giving owners good reporting, onboarding a new owner. It's just that the very cyclical, monthly, repetitive nature of the business. So again, for that business, we've got quality individuals in there that are running through that. But with that in mind, the property management business intact, I think it's just a buy and hold forever mentality, and you'll do really well in real estate.
I'm with you. I buy and hold too. I've never sold a property. I think it's like the best thing, and it's really safe. Hey, Mark, let me ask you this. So I talk to a lot of guys that are new in the space. They're like, I think you call it paralysis by analysis, right? Guys wanting to get into real estate. what's the number one tip you have for those guys that take the courses, keep learning, and don't take action? Like, what do you tell them?
Look, I think, when the time is right, the deal will appear, and you have to be educated enough to pull the trigger. If you truly have the financial wherewithal to do it, again, if people say, I have $10,000 and I want to get into real estate, what should you do? I say, go buy education, right? Like, if you've only got 10 grand, don't get into real estate. There's so many things that can pop up. But once you have some savings and you have a good banking relationship and you're making a good, you have a good shovel to work your way out of it, which would be a W-2 income job. Like if you're making some good money, you want to get into real estate, just be confident, play the game. When I was on the courthouse, I got in through the courthouse steps. And what I did for the first week, I just went there and saw all the deals that got snapped up by another investor. Then I drove by them retroactively, and started kind of retroactively looking at the deal flow. Like, what did he pay for it? What do I think it's worth? What would it cost to rehab? Oh, wow, he got a really good deal. Could I do that? Yes, I could have done that deal. Okay, go buy that one. Oh, that's in a bad area. I don't want that. Like, and you start just analyzing what others are doing. There's a book called Borrowed Brilliance, which I read a long time ago. The idea is that there's no such thing as original thought. Anything that you would think someone has done before. And so if you're looking at getting into real estate, train yourself up, get educated, do a blueprint for success. In other words, do a mock-up where you don't use money, but use pretend money, like Monopoly money, and go pretend like you did that asset. Would you have made money? What should you have done? And then surround yourself with people that are going to be a backup. I think the biggest mistake people do is they think they're on an island. You're not on an island. Surround yourself with free Facebook clubs or Flip Club as a pitch to your team. Like there are ways out there that you can learn and grow. Join your real estate meetup. Meet other people that are doing what you do. Learn from their mistakes. Borrow their brilliance. And it's hard to. And then obviously have the long-term exit strategy of never selling. As a backup. I mean, if you want to go flip, but just know that real estate, if you hold long enough, you'll always work your way out of it.
Yeah, and you know what? Surrounding yourself with the right people is so much valuable. That's so valuable too, because people that are successful from what I've seen, want to help other people getting into the business. If you got the hustle and the drive, things like that. So if you're just starting out, go find those people that are crushing it and try to give them value.
That's great advice, Bryan.
Because you're going to learn.
Yeah.
Yeah, cool, man. All right, Mark. Hey, we're about out of time, but what's the best way people can reach out to you?
Yeah, so podcast, mistakefreerealestate.com. If you go to SBD Housing is our company, so sbdhousing.com. I think on resources page, you can follow me on social, at Marck de Lautour on Insta. I think same thing on YouTube. So yeah, I'm out there. If you Google my name, which is a little unique, especially with the spelling of my first name, Marck, you'll be able to find me and start following me on social. Hit me up. I try and answer any questions that come in. But yeah, always trying to just give back, man. I'm a big believer. Jason Medley is a good friend and mentor of mine, and he has the old saying that the more you give, the scales of receiving will tip in your favor. And I appreciate you allowing me to give back today.
Yeah, thanks, man. I appreciate you being on. Now let me ask you this: so, if somebody's a wholesaler, comes across a deal out there, who's a good fit? Like someone in the space, they're wholesaling, things like that. Like, what specifically are you looking for? So if anyone comes across those types of deals in your areas, they know to hit you up.
Yeah, so we love working with wholesalers in the Kansas City marketplace that have found deals. We would offer that, part of the benefit of working with us is that we guarantee the close. Like if we do a deal, we've never gone under contract and then not closed on an asset, which I think separates us from a lot of the competition out there. I think the perfect person for us would just be someone that's got a quality deal, that's willing to be fair and transparent and open, and let us help them as well. I mean, I think that part of the benefit of working with a big company like SBD Housing is that we give back to our wholesalers, and we give that through education, right? So making sure that they can learn and grow. So even if it's a first-time wholesaler, we love to just educate them on what we do, who we are, how we can help them. And what marketing channels are working for us, so they can go and try and chase them down as well. I think the power of collaboration over competition is pretty meaningful to me. I love to work with others, and I think the best way to give back to wholesalers is treat them fairly, honestly, and make sure that you guarantee the close.
Yeah, it's a great way. Hey, if you're just getting into wholesaling too and you find deals, that's a good way to learn, because you're surrounded with people that know how to actually get it done. Cool, man. Hey, well, Mark, thanks for coming on. Let me look on Facebook real quick. Let me see if we have any questions in there. Okay. I don't know. I don't think we do. We may. I'm not sure. I usually have Philip on here with me. checking it, but he's out today. So, hey, if anyone has any questions, drop them in the comments. Mark's in the group. He can answer them for you. Hey, Mark, thanks for coming on, man. We appreciate you.
Pleasure, Brian. Thanks for your time today.
Thanks, man. We'll talk soon.
You bet.